I call this meeting of the Taxes Committee to order. First order of business today is approval of the minutes. Representative Smith, do you move the minutes from the April 2nd, 2025?
Yes, Chair. I have consulted with our CLA, and I do move the minutes.
Thank you for that. Any discussion on the minutes? Hearing none, all those in favor of approving the minutes signify by saying aye.
Aye.
All opposed? The minutes are approved. First things first, members, we do have our high school pages with us here today. Keeping with our tradition, we're going to ask them to please introduce themselves, share your name, your state representative if you know it, and most importantly, your school mascot. So if you want to stand up, and I don't know who wants to be the brave soul to go first, but all right.
I'm Carson Meyer. I go to Minnewaska High School. Our mascot's a shark. My representative is Paul Anderson.
My name is Iris Brown. I go to United Christian Academy. Our mascot is a thunderbolt, and my representative is Anupam Mohammed.
I'm James. I go to Nova Classical Academy. Our mascot is a knight, and my representative is Mary Cloud.
I'm Madeline Howe. I go to Blake. Our mascot is the bear, and my representative is Katie Jones.
Good morning. My name is Veronica. I go to Totino Grace High School, so I'm an Eagle, and I'm represented by Kelly Moeller.
I'm Zane Beck. I go to Cannon Falls High School. Our mascot is a cannon, and my representative is Hamilton.
I'm Emery. I go to Southwest in Chaska. Our mascot is a star, I think, and my representative is Stephenson.
My name is Mia Witt. I go to school at Alexander Public High School. Our mascot is a hornet, and my representative is Julie Green.
All right, thank you. We had some good ones, Chair Davis. Thunderbolts, cannons, sharks.
Mr. Chairman, I thought it was the bombers from Cannon Falls, but it's the cannons?
That's what happens after you get played.
Okay, cannon on the logo. And I'd have one question for the high school pages. How many of you have, and I'll be honest, how many of you, not that you wouldn't be honest, how many of you ever heard of the group Jefferson Starship? Representative Freiberg, we gotta work on them.
Did you want me to?
Thank you, Chair Davis.
Mr. Chair, did you want me to give my extensive exegesis on the history of Jefferson Starship?
Representative Freiberg, we do have a weighty agenda today here, so.
Okay, I'll pass.
All right. Well, thank you for that, Pages. Thanks for joining us. I actually was a former high school page myself, as well as Representative Lee. We actually were pages together back when we were juniors. So hopefully some of you will be joining us in these seats at some point in the future. All right. Our first bill up today is House File 2768. This is a Chair Gomez bill. Chair Gomez, would you like to move that House File 2768 be laid over for possible inclusion in the 2025 taxes bill?
Yes, please, Mr. Chair.
All right, so moved. And I believe we have an amendment, members. It is coded A25-0050, and I think we're going to go to nonpartisan staff or the agency to describe the amendment. I don't know who wants it. The agency? All right, we're going to go to Ms. Bears.
Good morning, Mr. Chair, members of the committee. For the record, my name is Joanna Bears. I'm the Legislative Director at the Department of Revenue. And the amendment just really pulls out two sections that were accidentally included when we put our policy and technical bill in. It revolves around the PTE. This happened when we were preparing for conformity on possible federal legislation, along with looking at items that the TCJA that would expire. And so they're meant to do internal preparation, not to be included.
Great. Thank you for that explanation, Ms. Bears. Any questions on the amendment, members? All right. Seeing none, all in favor of the A25-0050 amendment, say aye. Aye. All those opposed? The amendment is adopted. All right. Chair Gomez, do you want to make any introductory comments on the bill before going to the testifiers, or just go straight to testimony?
We can go right into it, Mr. Chair.
All right. In that case, we'll go back to Ms. Bears for your testimony.
Mr. Chair, members, we appreciate the opportunity today to provide our testimony on the policy and technical bill. This bill is really about providing clarity in the Minnesota tax code so that taxpayers understand their tax obligations moving forward. And most of these items are not new. They were included in our policy and technical bill last year. There are 6 new items, though, that I just want to kind of highlight so that folks know which ones are new and which ones were old. The new items are in Article 2, Section 1, 5, 6, 7, and 8, and then Article 3, Section 1. Everything else was included in last year's bill. And I also want to acknowledge the longstanding rule of this committee that if there are any questions or concerns with any of these items in the bill, that, we'll happy to talk through it and work through it, and if we can't get it resolved, we understand that the item will be removed from consideration this year, and we agree with that. So before I move on, I just want to thank everyone, thanking the author and this committee for hearing it again today, and with that, I'll turn it over to my colleague, Ms. Reisdorf.
All right, Attorney Reisdorf, please introduce yourself and proceed with your testimony.
Okay, thank you. Good morning, members of the committee. My name is Margaret Reisdorf, and I'm an attorney at the Minnesota Department of Revenue, and I will be summarizing the provisions of Article 1 of House File 2768, the department's policy and technical bill. Section 1 of Article 1 and Section 3, Section 3, Article 6, or Article 3, Section 6, sorry, both make technical changes to the film production credit. The change that you see in Article 1, Section 1 allows eligible taxpayers to use 25% of their eligible film production costs paid in any consecutive 12-month period for purposes of the credit calculation. This is different than current law, which only allows a taxable year. The second change to the film credit is found in Article 3, Section 6, and that relates to the insurance premium credit aspects of this credit. It extends the deadline for being able to take the credit so that it matches the effective dates of the credit itself. I'm going to skip Section 2 and Section 3 that have been removed. Section 4. Section 4 of Article 1 has a change on lines 7.4 to 7.6 that removes obsolete pass-through entity tax income allocation language that was updated in 2023 in House File 31, Chapter 1, Section 7. This change is effective retroactively to that taxable year so that the change is consistent with the allocation changes made in 2023. Section 5. Section 5 provides an amendment to the Social Security subtraction for individual income taxpayers. In 2023, this subtraction was amended to allow one of 2 alternative methods to calculate the subtraction, whichever calculation benefited the taxpayer the most. This change simply updates the paragraph references that were missed, so paragraph C to E. This change, too, because it is purely technical, is effective retroactively to when the substantive change in 2023 occurred. Article 1, Section 6. This change relates to the qualified retirement benefits subtraction. These changes are found on lines 9.6, 9.10, and 9.12, and they make clear that qualified public pension income is the income of plan members who did not earn credits towards Social Security benefits for that same work. This section is effective day following final enactment. Next, Section 7, Sections 4, 7, and 12 all relate to technical amendments that relate to the business interest expense limitation. So the first is in Section 4 on lines 6.25 and 6.33. That change amends the income definitions for both the composite tax and the pass-through entity tax to take into account the delayed business interest subtraction. Section 4 this portion of Section 4 is effective retroactively back to that substantive change for taxable years beginning after December 31st, 2022. The second change is in Section 7, lines 9.25, and that amends the corporate subtraction to allow for this cross-reference. Section 7 is effective retroactively back to the law change, for taxable years beginning after December 31st, 2019. The third and final change that relates to the delayed business interest subtraction is in Section 7. That is found on 14.31 through 15.6. And it amends a temporary law that was enacted at that time to address the modification. That section is effective retroactively to the same time that the changes that were made in 2023, Chapter 1, Section 22, were effective for federal purposes. The next change actually all relate, so Sections 8, 9, and 10 of Article 1 all relate to the renter's credit. The renter's credit, formerly known as the renter's refund under Chapter 290A, we just have three technical changes. The first in Section 8 amends lines 10.13 to clarify that the definition of dependent for the renter's credit includes only dependents that are actually claimed by the taxpayer. The next technical change in Section 9 amends the credit to clarify that the ratio used to determine the renter's credit for the taxpayer who accepts medical assistance, housing support payments, don't have to count that twice. Now that the renter's credit is on the M1, we tie into adjusted gross income, and we no longer need that mathematical change like we did when it was its own provision under 290 Cap A. And then finally, Section 10 amends the credit to clarify that married couples filing joint tax returns will use the total of both spouses' gross rent when claiming the credit. And it further clarifies that when a married filing separate return is made, that both spouses their share of gross rent must be used to calculate the credit. All of these three changes are effective for taxable years beginning after December 31st, 2024, consistent with the move of the renter's credit from Chapter 290 Cap A into Chapter 290. And then finally, Section 11. Section 11 amends the short line railroad credit calculation. It makes a technical change to the calculation so that it works correctly. It makes clear that the credit does not exceed the product of multiplying the qualifying number of miles of road track by 3,000. This section is effective retroactively to the enactment of this credit for taxable years beginning after December 31st, 2022. And I'm happy to answer any questions.
Thank you, Attorney Reisdorf. Yeah, members, we're going to have a rotating cast of testifiers from the agency this morning, so I'll maybe pause after each article and see if members have questions. So any questions on Article 1 for Attorney Reisdorf? All right, seeing none, Representative Lee.
It's not a question, I guess just, are we going to do member discussion at the end? Okay.
Yes, we will have time for member discussion at the end. All right, seeing none on Article 1, we will move on to Article 2. Please introduce yourself for the record and proceed with your testimony.
Good morning. Good morning, Chair, members of the committee. I'm Dexter Wilson. I'm an attorney with the Department of Revenue. I'll be going over the sales tax articles beginning on page 15.
Attorney Wilson, if you could just pull the microphone a little bit closer. Perfect, thank you.
All right, like I said, we're going Article 2, starting on page 15, the sales tax article. Sections 1, 2, 3, and 4, the first sections, all address the sustainable aviation fuel construction exemption. And these changes clarify the period that the exemption is for what period of time purchases would be exempt, and then the process for a facility to claim that refund. And note the effective date for these are effective the day following final enactment, but we're not changing that period that the exemption is, and this is still for those purchases in June or July 27 through June 2034. The next section, Section 5, this addresses the deposit of revenue on the sales of motor vehicle parts. The sales tax on motor vehicle replacement parts is deposited into a dedicated account, and this clarifies that those deposits are based on an estimated amount and then provides how the department estimates that amount of tax. It's effective the day following final enactment. The final three changes, Sections 6, 7, and 8 are related to the streamlined sales tax. Section 6 addresses the sourcing of sales. To properly source a sale, you need a 9-digit zip code, and this is because the boundaries of political subdivisions and 5-digit zip codes are inconsistent, so you need more information. And you can get that 9-digit zip code using a street address and a 5-digit zip code. And this clarifies when a seller has exercised due diligence in determining that 9-digit zip code and may apply the rate for the 5-digit zip code instead if they're unable to determine that 9-digit zip code. This is effective for sales and purchases made after June 30th, 2025. Sections 7 and 8 address certified service providers. Section 7 addresses the definition of certified service providers to align the definition with the definition in the streamlined agreement. Section 8 addresses liability relief to be consistent with these certified service provider contracts referenced in the streamlined agreement. This is effective for sales and purchases made after June 30, 2025. And that marks the end of Article 2.
Thank you, Attorney Wilson. Members, any questions on Article 2 of the bill? All right, seeing none, we'll move on to Article 3. Thank you for joining us. Please introduce yourself for the record and proceed with your testimony.
Good morning, Mr. Chair, and good morning to the committee. My name is Monique Mendonca. I'm an attorney at the Department of Revenue, and I'll be summarizing Article 3, which is titled Miscellaneous, and that starts on page 24 of the bill. So Section 1, starting at line 24.27, adds a client's department payment as a violation to the standards of conduct for tax preparer if the tax preparer takes ownership, control, or establishes an account in the preparer's name. This amendment is needed in order to ensure that payments such as payments of the advanced child tax credit or similar type payments receive the same protection as a tax refund would. And this is effective for taxable years beginning after December 31st, 2024. Section 2, starting at line 27.6, does two things. First, it clarifies when a contested case commences before the Office of Administrative Hearings, when a tax preparer challenges an order issued for improper tax return preparation practices. Second, it lengthens timelines for parties and for the Office of Administrative Hearings to act in contested case proceedings regarding cease and desist order or administrative penalties. And this section is effective for penalties assessed in orders issued after the day following final enactment. Section 3, starting at line 29.22, adds 42 property as an option for the remaining market value of 1B property. During the 2023 session, qualifying low-income property was expanded to add this new class of property, owner-occupied community land trust property. Currently, the remaining market value of Class 1B property can only be classified as 1A or 2A property. This section adds 42 to allow the market value of Class 1B property in excess of $50,000 to be classified at the lower 42 rate, if applicable. And this amendment is effective for assessment year 2025 and thereafter. Section 4, starting at line 3213, removes the first of two estate informational return requirements. Currently, a qualified heir must file 2 estate informational returns after a decedent's death to confirm that the estate recapture tax is not due. The first return is required 24 to 26 months after a decedent's death, and the second informational return is required between 36 and 39 months from the decedent's death, and this amendment removes that first informational return requirement. And that is effective following final enactment. Section 5, starting at line 3221, eliminates the requirement that lawful gambling taxpayers create an annual cash count report at the end of their fiscal year. This cash count is not helpful to the department for compliance purposes, and it's no longer used by the Gambling Control Board. The cash count requirement also imposes unnecessary time and financial burden on taxpayers. So as a result, the department hopes to eliminate the cash count requirement effective July 1st, 2025. Section 6 concerns the film production tax credit, which was summarized along with Article 1. So I'll be skipping that and going straight to Section 7. Section 7, starting on line 34.1, corrects an uncodified session law from the 2023 session. The 2023 session law provides additional time for certain filers to amend their returns for Minnesota federal conformity. The session law incorrectly referenced Chapter 289 instead of 289A, so Section 7 fixes that. And that will be effective retroactively to when it was effective under the session law for federal purposes.
All right. Thank you, Attorney Mendonca. Any questions on Article 3, members? All right, seeing none, are there any members of the public who wish to testify on the bill? All right, then we'll move on to member discussion. Representative Lee.
Thank you, Chair. I was just going to point out the film tax credit update. I want to thank the department for doing that. As the author last session, also want to note NPR recently did an article about how the film tax credit was used to film Love is Blind in Minneapolis. And so I would point people to that to see kind of the TV shows and movies that could come to Minnesota because of our film tax credit. So thanks for making the credit work.
All right, Chair Davids.
Thank you, and thank you, Chair Gomez, for carrying this bill and the department for describing it. The original author of the film credit was me. And I'm just really hoping, and Ms. Bears, if you could help out with this, I'd really like the Beekeeper 2 to be filmed in Minnesota, if that's okay. See what you can do. Thank you, Mr. Chair.
Thank you, Chair Davids. Any other discussion? All right, Chair Gomez, any final remarks on the bill?
I don't think so. Thank you, Mr. Chair. Thanks for hearing it.
All right, and with that, Chair Gomez renews her motion that House File 2768, as amended, be laid over for possible inclusion in the 2025 taxes bill. All right. Next up, members, is another Chair Gomez bill. This one is House File 2591. Chair Gomez, would you like to move that House File 2591 be laid over for possible inclusion in the 2025 taxes bill?
Yes, please, Chair Norris.
All right. Chair Gomez, to your bill.
Thank you very much. So House File 2591 is the Support Medicaid Not Millionaires Act. And, so what we have a situation with our federal government where we've seen a House budget resolution passed some weeks ago, and it has a negative $880 billion target for energy and commerce and a positive $4.5 trillion target for the Ways and Means Committee. Now, it's interesting to me that you will hear Republicans at all levels of government talk about their concern with the national debt. And that is a justification, in some cases, for the kind of destructive, draconian measures that we see at the federal level that is, resulting in material impacts here in Minnesota. There are almost 200 employees at the Minnesota Department of Health who are losing their jobs. We have no infectious disease control staff, for example, at MDH. That's just one example across the government. And the justification, again, that we hear is, well, we have this ballooning national debt. But what we actually see when you look at the budget resolution that was passed by the U.S. House of Representatives is that this $880 billion cut in energy and commerce, that can only really come from Medicaid. The $4.5 trillion positive target in Ways and Means is going to extend the Trump tax cuts, which disproportionately benefited the biggest corporations in the world and multimillionaires and billionaires. And so Medicaid impacts every one of your districts, every one of our districts. 42% of children in Minnesota rely on Medicaid for their health insurance. Half of long-term care is paid not by Medicare, but by Medicaid. 2/3 of people on Medicaid are families, parents, people about to have babies, children. 20% of mental health treatment. We're in the middle, right, of a substance use disorder crisis. Half of SUD treatment in Minnesota is paid for by Medicaid. This program is a lifeline for Minnesotans. And what we see is that there's a proposal at the federal level to cut this life-saving program in order to give more tax cuts, not to address the national debt, but to give trillions of dollars of tax cuts to corporations and multimillionaires. And so what this bill does is, in the case, this $880 billion cut, our portion of it, Minnesota's portion of it, would be 1.4 to 1.6 billion in fiscal year 2027 is what our analysts think, right? That's in 1 year. That blows a giant hole in the side of our budget. And it's very likely that whatever the budget deal is ultimately passed is ultimately passed by Congress will happen while we are not in session. And so we could be looking at having this giant hole blown in the side of our budget so that we can hand tax cuts to corporations and millionaires while we're not even here to respond to it. And so what House File 2591 does is it establishes a fifth tier on the individual income tax at a rate sufficient to offset any cuts in federal Medicaid funding that flow to the state of Minnesota. The rate applies to, the threshold is 1.667 million for married filing joint returns, $1 million for single returns, and 1.3 million roughly for head of household returns. If we have been sold this lie before, right, about we've heard it certainly in the 80s, right, when I was a kid. We heard it again in 2017. Oh, if we just give these tax cuts to corporations and millionaires and billionaires, it's going to flow down. It's going to trickle down to regular working people. Well, look at any analysis of the 2017 federal TCJA. And every analysis that I've read says that those benefits disproportionately went to top income earners, to big corporations. The promises that were made. There were promises made to our communities in 2017. This would raise wages, this would create jobs, this would create investment in our communities. None of that has happened. What the TCJA did is it cut tax bills for very rich people. It allowed corporations to do stock buybacks. It allowed them to pad their executive compensation. And none of those benefits, as every time they tell us that if we just cut taxes for the rich, it'll flow down to working class people, did not materialize. And so what this says, what House File 2591 says is, look, if the unelected billionaires who are running the federal government want to give themselves and their buddies huge tax cuts on the back of Minnesota kids and people in long-term care and elders and families who rely on this health care, this life-saving health care, then we are going to say to the beneficiaries of those tax cuts that you're going to have to pony up and fill this hole that's created in our budget. So I appreciate the support, Mr. Chair, and look forward to conversation about 2591. Thank you.
All right. Thank you, Chair Gomez. We do have a number of testifiers on this bill. As a result, we're going to ask testifiers to keep their remarks to 2 minutes. And the first one, we've got a testifier from SEIU Healthcare. If you could make your way to the testifier table.
Morning.
Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
Hello, my name is Simone Blaylock. Hello, Chair Norris and Chair Gomez and the members of the committee. Again, my name is Simone Blaylock. I'm from SEIU Healthcare, Minnesota and Iowa. We represent 55,000 healthcare workers here. And our work depends on Medicaid to support this bill. If the federal government cuts Medicaid funding, Minnesota must fill the gap. So I've been a home care worker for 18 years to my son Xavier. He has a genetic disorder, intellectual disability, and he's on the autism spectrum. Every day I take care of Xavier. I get up with him, I dress him and get him ready for school and help him with his daily cares. Every day I'm in contact with his teachers and making medical appointments and taking him to those appointments around the community. I also have to be with Xavier so he stays safe. All this is because of Medicaid that I'm able to do this. I have gotten Medicaid for myself also. I have multiple health issues, diabetes and high blood pressure and even a brain tumor. If my health care is cut, I would not be able to care for my son without Medicaid. Hospitals, both rural and urban, will also struggle to remain open. Medicaid provides care for our grandparents and the elderly who stay in these homes. Without Medicaid, Minnesota nursing homes will close. I am fighting hard to stop the federal cuts to Medicaid. I know many of you in both parties are trying to stop them too. Funding for these state programs, especially home care and nursing homes, has always had strong bipartisan support in Minnesota. So if we don't win in DC, Minnesota will still be a rich state. We can't afford to raise the money we need to take care of our people. So Medicaid is a lifeline for me, my family, and the people I care for. So please support this bill. Thank you.
Thank you, Simone Blaylock. Next up is Marika DeCure from MAPE. Please. Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
Thank you. My name is Marika DeCure. Excellent job on the pronunciation there.
Thank you.
Thank you, Co-Chairs Gomez and Davids, and members of the committee. I am an epidemiologist at the Minnesota Department of Health, but I'm testifying today in my capacity as a proud member of the Minnesota Association of Professional Employees, my union. Thank you for allowing me to voice my support for House File 2591. House File 2591, also known as the Protect Medicaid and Not Millionaires Act, is a step in the right direction in preparing our state to weather anticipated cuts to Medicaid funding from the federal government. The legislation's proposed fifth-tier tax bracket for Minnesotans' largest earners is a reasonable approach to ensure that Minnesotans can continue to rely on the programs and services that they need. Cuts to the state's public health infrastructure have already started. I think we all know that $226 million was cut from MDH last week and has resulted in around 170 or more layoffs or terminations of many full-time employees, contract employees, and part-time employees. These people are experts in their field, and many of them work in areas of infectious disease prevention and control. Minnesotans now face risks to their health and well-being of their communities. If Medicaid is also cut, the impact on health will be irreversible. I would say that we are already in a place where the impact is irreversible. I work as a foodborne disease epidemiologist. I track and investigate outbreaks of illness due to pathogens like Salmonella and E. coli, and my team lost 5 members in the last week. These are global experts who have provided trainings around the world, across the US, to improve foodborne disease outbreak investigations, and we're losing their expertise for no reason. Between the cuts at the state and the CDC and FDA in the last week, we are no longer able to investigate the way that we used to and the way that we should be able to protect the state. We've also lost the entire team, basically, that does data modernization and improves the methods that we have for reporting diseases and blood lead levels. These are just some of the losses that we have had in the last week, and all of these will actively harm the programs that we do and all of the people who we are trying to keep safe and healthy in the state. So we ask you not only to pass House File 2591, but to strongly consider additional revenue increases to begin backfilling the current and anticipated cuts to our public health and safety net programs, as this is likely only the beginning. Again, thank you for the opportunity to testify today.
Thank you, Marika DeCure, for sharing your testimony. Next up is Barbara Bennett. And after that will be Sarah Mullins. Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
My name is Barbara Bennett. I am a leader in Isaiah. I attend the Refuge Church in St. Paul, and I live in St. Paul. I have 4 kids and 6 grandkids. I am passionate about them, and it fuels my support for the 5th tax tier and the need for more ways to increase our state's revenue. Years of disinvestment in our communities because corporations and the very wealthy have failed to pay what they should in taxes have hurt me and my kids. When I was raising my daughter Ebony, I did everything I could to help her find her way in life and addressed her literacy and emotional issues. I tried to reach out to many people and organizations to get help that she needed. Sadly, the help just wasn't there. Unfortunately, my daughter dropped out of school and in the 6th grade. She ended up being on the streets, selling drugs, getting into gangs, and got caught up in teen pregnancy. I'm not alone in my story. In the apartment building I lived in, I had a neighbor who was a single mother with 8 boys. She was struggling too and couldn't keep up. Now there are some lies being told about single mothers, that all of us don't care about our kids, or that we aren't active in our kids' lives, that we are a drain to the system. That's not true. I was a proactive parent and did everything I could to help my children. Yet the funding needed to have accessible and affordable extracurricular activities, mentorship, emotional support, and culturally relevant ways to empower and develop our children of color in much less now than was decades ago. I've been hearing that even places like Edina are struggling to offer youth programming. Decades of disinvestment has a real impact on people's lives. The consequences of our failure to make sure the wealthy and big corporations pay their fair share shouldn't fall on the backs of my kids, our kids. We must do better. Please support this bill and encourage you to look for ways to raise revenue in other places. Thank you.
Thank you, Barbara Bennett. Next up is Sarah Mullins, and following Sarah Mullins will be Eric Bernstein. Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
Good morning. Thank you, Chair, for the opportunity, and committee members for the opportunity to testify in this bill. My name is Sarah Mullins. I live in St. Paul. No matter our race, zip code, or income level, Minnesotans rely on our state and federal tax revenues to bolster public goods. Repairing our roads after winter, providing programming for youth, and protection of our lakes and rivers are just a few examples of this ongoing commitment to the general well-being of Minnesotans. I support the progressive income tax structure that funds these and multitudes of other state-administered programs. It's an investment in our residents and our shared future. Medicaid programs make medical care accessible to every Minnesotan. Medicaid enrollment is evenly distributed around every part of the state. It pays for prenatal care, births, and well kid visits, seniors in long care facilities, mental health services for our veterans. It keeps medical care facilities open in rural areas, which means medical care for everyone in those communities. Minnesota does amazing things with Medicaid. On a personal note, my sister is disabled and uses Medicaid. Reliable access to healthcare services is part of what makes it possible for her to work part-time and live independently. I am worried that she will lose her coverage. What happens to her well-being if she stops getting the care she needs? I can't solve this problem on my own, and I don't get to add an adult sibling to my health care plan. These expected federal cuts to Medicaid are horrendous. I've called my federal rep and both my senators to share my concerns. I wrote to Majority Whip Emmer, imploring him to listen to the concerns expressed by Minnesota GOP state legislators about these impacts. Every legislator here has constituents who would face harm if they lose access to Medicaid programs. And so today, we must do something together for the welfare of all Minnesotans, and I'm asking you to support this fifth-tier income tax bracket to offset federal Medicaid cuts. Thank you.
Thank you, Sarah Mullins. Next up is Eric Bernstein, followed by Pahua Yang. Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
Chair Norris and members of the committee. My name is Eric Bernstein. I'm the director of We Make Minnesota. We're a coalition of labor and grassroots organizations united in support of public investment for a more just and equitable state. I want to thank you for the opportunity to share our perspective on HF 2591, which would establish a new income tax bracket on millionaires sufficient to make up the revenue necessary to hold Medicaid harmless in the event of federal cuts. Our coalition is deeply concerned about these impacts, and we are grateful for this conversation about how the state can compensate for lost federal funding. As the federal government continues to pursue reckless and unsustainable fiscal policies, Minnesota will have to decide what role it will play in maintaining vital public health programs like medical assistance. As legislators, you have a great many tools at your disposal to protect these programs, and millions of Minnesotans are depending on your willingness to do so. Often conversations in tax committees center on state-to-state comparisons over tax rates and exemptions and other policies. I understand these concerns around competitiveness, but the current federal outlook, I think, necessitates a different orientation. We have to consider the total level of investment or divestment that we're willing to tolerate. The U.S. already has the weakest social safety net in the developed world. And we have not seen Medicaid cuts on this scale being discussed in several decades. This week, we already heard, as we heard today, of the layoffs of 176 public health staff, including epidemiologists and infectious disease specialists at the Department of Health. So we have to we have to ask ourselves what reality we're willing to accept. Infectious diseases did not respond to estimated income tax elasticities, the statistics about business investment and things like that. These are very real realities that are going to face single mothers, families with children. So when we're in tax committee talking about funding these programs, the competitiveness, it can't be the only consideration. We have to think about what public health outcomes we're willing to accept. We should also remember where we are historically. In recent years, total effective federal tax rates have hit their lowest level since 1979. In 2017, the Tax Cuts and Jobs Act slashed the top marginal income tax rate by 2.6% and cut the federal rate by nearly half. We can choose a different path. And I think this is one idea, but I encourage everyone to start thinking about other ideas of how we can plug the holes that we're going to see in our budget and our essential programs. If there's one critique of this bill, I just say that when I was growing up, a millionaire was someone who had $1 million, not someone who made $1 million in a single year. So I think this is even more progressive than that. So, for a broader base, maybe we consider people who are making merely $500,000 a year, and we raise more revenue that way. Thanks very much.
Thank you, Eric Bernstein. Pahua Yang is next on the list. Welcome to the committee. Please introduce yourself for the record and proceed with your testimony.
Yes, good morning, Mr. Chair, members of the committee. My name is Pahua Yang, and I'm here to testify in support of House File 2591. I am the Vice President of Community Mental Health and Wellness at the Wilder Foundation, where we have been providing mental health services for over 100 years. We are a certified community behavioral health clinic providing integrated mental health and substance use disorder services in the heart of St. Paul. We serve over 2,600 families annually in our mental health clinic, and we have full-time therapists in 24 public schools, 4 large charters, and 1 intermediate school district, where we serve almost 600 children and families every year. We have 200 dedicated team members who work together on a daily basis to support individuals and families in obtaining and maintaining recovery. The majority of the people we serve either have Medicaid as their primary or secondary coverage. Most are employed and contributing back to our community. I make that clarification because when I talk about folks on Medicaid, people often make a lot of assumptions about who they are. We're talking about our friends, our neighbors, our brothers and sisters, our parents, grandparents, classmates, folks who are doing their best and seeking treatment because they want to give themselves and their families a better life. Cutting Medicaid would be cutting our community off at the knees at a time when they are most vulnerable. For many of the adults and families and little kids that we serve, an underfunded Medicaid system could literally mean life or death. My first client, when I came to Wilder 16 years ago, was a 5-year-old who tried to kill himself because he had lost a beloved family member, and his 5-year-old heart just couldn't absorb that pain. His family was on Medicaid. His parents had multiple jobs and worked more than 40 hours a week. These are the faces of Medicaid. The loss of Medicaid, which is one of the main funding sources for many of the community mental health clinics across Minnesota, would not only decimate our clinics and our fragile mental health system, it would derail all of the gains we have made in this state to grow our workforce and force us to dismantle the system we have proudly been building for all Minnesotans. 1 in 5 Minnesotans relies on Medicaid. That means most of us know someone whose life or livelihood depends on Medicaid. And I do not exaggerate when I say the loss of Medicaid could be the difference between life and death for many Minnesotans. It would mean that more clinics and hospitals and nursing homes will not be able to keep their doors open for those who depend on them for services and employment. My colleagues at Wilder Research, who work throughout the state, have pointed out that rural communities are in particular danger. Not only do they have many folks on Medicaid, as demonstrated by the coverage maps that we've provided, but as clinics shut down due to the loss of steady MA reimbursements, it will become even more difficult for folks to access health care close to home. It would dismantle the community mental health system we have been building with your leadership. Over the years, I've sat in front of many of you and asked you to make investments in us, in Minnesotans who deserve great care and great jobs in the mental health field. Today, I ask you to rise to the occasion once again. We desperately need your leadership to help us guard against the gutting of Medicaid. We have to prepare for the losses for funding we know are coming, and I ask you to please not sit idly by. This bill provides the state a way to mitigate some of the pain that is headed our way. So please come together and act by passing this bill. This is not just a healthcare issue. This will impact every corner of the state and every jurisdiction, and it will decimate a healthcare sector which employs so many Minnesotans as well. Medicaid touches every community in this state, and what has made Minnesota special is that we take care of each other. Thank you so much, Mr. Chair, members of the committee.
Thank you, Pahua Yang. Any other members of the public who wish to testify on this bill? All right, seeing none, we'll move on to member discussion.
I have a bill.
Representative Anderson.
Thank you. Is Human Services here, the Medicaid unit?
I did see them earlier. I don't know if they're here. Are you looking for one of them to come up to the testifier table, or? Yeah, Chris.
Come on.
Yeah. All right.
Thank
Please proceed, Representative Anderson.
I have a couple questions. So Medicaid's been opened in Minnesota. We're one of 7 states that provides Medicaid to undocumented or illegal immigrants. Do we have, do you know how much of those Medicaid dollars are federal versus state? It looks like generally, from the numbers that I can find, you know, the federal dollars is over half, about 60% of the overall Medicaid dollars spent in Minnesota. Is it the same percentage with undocumented?
Welcome to the Taxes Committee. Please introduce yourself for the record and proceed with answering the question.
Thank you, Mr. Chair. My name is Christy Grum, and I'm with the Department of Human Services. Representative, we can get back to you with all of the specific data that you're requesting. I believe that you're either referring to emergency medical assistance, which, no, you're referring to Minnesota Care, which does not have a federal match.
Representative Anderson.
Thank you. So both. So, you know, emergency has been open the whole time, and then Minnesota Care, my understanding is that Medicaid sign-up starting in '23 and then now in '25 to illegal undocumented immigrants, that Medicaid is available in Minnesota right now.
Ms. Grum.
So,
Mr. Chair, Representative Anderson, I believe you're referring to Minnesota Care, not Medicaid, which generally does have some funding implications from the behavioral health plan, I'm sorry, the state's basic health plan, but generally it doesn't have the same kind of match that Medicaid does, which is about a 50 to 90% from the federal government.
okay.
Representative Anderson.
Thank you. I'd like those numbers because my understanding is that that was opened as of '25 in the last tax bill or human services bill last session, I think, to undocumented illegal immigrants. Medicaid was in Minnesota. But it would be good to know.
No, Medicaid.
Okay.
Chair Gomez.
I mean, Medicaid's is a federal program that is not, you know, that is available to citizens, is my understanding, or people with legal status.
Yes,
Ms. Grum.
Mr. Chair, Representative Chair Gomez is correct. You are referring to Minnesota Care, not.
Okay. Thank you. I'm not
Representative Anderson.
I'm not a human services expert, so I would like those numbers. I think that's important for the committee, just to understand how much of those dollars are flowing, Medicaid dollars flowing to, whether that is, you know, into any of these programs, but they're, you know, how much Medicaid dollars flowing to illegal immigrants. And I know we're one of 7 states that has allowed that through Minnesota Care.
Chair Gomez.
Mr. Chair, I just want to be really clear. That's the premise of your question is, Ms. Grom just said, Medicaid dollars do not go to provide health care to undocumented people. But what I do want to say is that there is, hospitals have to provide care to people. When people don't have preventative health care, when they can't go to a regular doctor, where do they go and receive their health care? They go to our hospitals, okay? In the metro area, our hospitals are, especially our kind of public safety net hospitals, do have challenges around uncompensated care, certainly not just for people who are undocumented. But the issue of uncompensated care that hospitals must and do provide to people when they're experiencing medical emergencies is a huge issue, especially for rural hospitals. And so we all, you don't have to be a healthcare expert. You just have to have been paying attention to the world to know that a pound of, or an ounce of prevention is worth a pound of cure. And so whatever you want to say about your personal views about immigration, immigrants are in every county and every corner of this state. They are working side by side with us. Their children are going to school side by side with our children. And providing medical care is a way to ensure that our medical system, especially in greater Minnesota, is not, kind of paying for the most expensive way to provide care to people.
Representative Anderson.
Thank you. I'd love the data because I know that you said a portion of Minnesota Care goes to undocumented. And so that we are providing dollars for that. So I would love that data. I also have a question, I guess, about the bill. So if the, in here, it doesn't really specify why cuts would occur. This is the overall percentage is about a 13% cut if it happens. If the $880 billion is cut at the federal level, it's about a 13% cut from the numbers that you gave me overall to Minnesota's Medicaid match, I guess, which would be overall about a 7% cut in funding here, which, but I would, we know that here alone, the Attorney General has prosecuted, from what I could just find quickly, $70 million in Medicaid fraud cases. The Attorney General, good job. That's probably a drop in the bucket. We know that. It's probably a tiny bit amount. We have looked at numbers between the dollars which are going to illegal immigrants, which is illegal and fraudulent, okay? And
Mr. Chair.
And the it is. It's illegal.
Mr.
And-
Chair.
Chair Gomez?
Yeah, thank you. We're just gonna, we're gonna stay within this bill, and we're not gonna refer to people as illegal.
They're illegal.
No human being is illegal. Human beings are human beings. You want to try to dehumanize people, and you want to try to create division when there is no need for that.
All right, Representative Anderson, we are going to try to bring it back to this specific bill. If you have questions or comments about this specific bill,
Thank you.
please.
Just the final. We know that there is significant fraud in Medicaid. We know that. And I hope, as you know, I'm more of a deficit hawk than a tax hawk. And we have to they're trying to do something at the federal level to balance the budget. What they do beyond that, we'll see what happens. But they have to do something to get rid of the fraud at the federal level. Just like we have to do something to get rid of the fraud at the state of Minnesota level. And it's a huge, huge amount of money that's fraudulent in the state. Tax dollars that aren't going to the people that need it, that aren't going to the nursing homes. The governor's budget has nursing home cuts. And so the question is, if the feds cut the fraud, and they cut those dollars because of changes in policy about Medicaid dollars going to, they tighten up the fraud, does that create a cut in your proposal? Are you proposing that we backfill fraud in Medicaid by raising taxes at the state level? That's my question.
It does sound like there was a question at the tail end of that
sure there
statement.
was.
Chair Gomez.
Yeah, please show me anything. Show me anyone who thinks there's $880 billion of fraud in Medicaid. Please, by all means. You just talked about $70 million that the Attorney General's Medicaid fraud unit has covered. I don't know how many years that's over. And listen, 4 years. Okay, so how does that compare to $1.2 to $1.7 billion a year that we might be facing if they implement these cuts? Those are not comparable numbers. And like I said, 42% of children, Representative Anderson, are on Medicaid. That's where they get their health care from. They're not committing fraud. I agree. I actually agree with you. And I've I know that you're on Chair Robbins. She's not here, but you're on her committee, and you've talked about, what it means that we have basically privatized so much of government by outsourcing it to nonprofits. We have to have a real conversation about that. And honestly, I wish that was the conversation that was happening in Chair Robbins's committee. I wish she was talking about, and again, and this is providers we're talking about. This is not individuals. This is not the pregnant woman getting coverage, or the 42% of Minnesota kids who are committing Medicaid fraud. These are unscrupulous companies, right, run by fraudsters. And we absolutely agree. Any cent of money that's supposed to go to an elder or a disabled person or a kid in Minnesota that's being siphoned off to be spent on luxury goods is an offense, and we should link arms and root it out. And I wish that was what was happening in the fraud committee, but instead we're talking about honestly, relatively small bore grant requirements that are going to little nonprofits. Profits. It's like, let's actually look at the, you know, the flaws in the delivery system for healthcare in our country. We can do that together. But the idea that you talk about, oh, well, we have to do something about the federal debt. That's what you just said. This House budget resolution, $4.2 trillion in tax cuts, they're not paying for those. They're adding more than $2 trillion to the national debt just with this budget resolution. Again, you're going to hear a lot of people talk about, oh, well, you know, the reason that we're doing all of these draconian cuts is to balance the national debt. Well, you can say that, but it's in black and white in the budget resolution. That is not the plan. The plan and the reason for House File 2591 is because they want to give their buddies $4.5 trillion of tax cuts on the backs of people on Medicaid and people on SNAP. And in Minnesota, we're not going to allow it. We're going to have a response. We're going to ask those very same millionaires and big companies that are benefiting from, you know, they had a 40% corporate rate cut in 2017, and they're going to give them another one. Highest income Americans disproportionately getting this $4.5 trillion. The budget lab at Yale University did this analysis based on this budget resolution and said that this would be one of the largest transfer, if this budget resolution from the House goes into place, it'll be one of the largest transfers of wealth from the bottom to the top in US history. So let's be very clear about what the intent is here. Nobody's proposing to gut Medicaid to pay down the national debt or to, like, you know, make sure that waste, fraud, and abuse is rooted out. That is an excuse, but what is actually happening is here in front of us in black and white.
Thank you, Chair Gomez. We've got a number of members on the list here, so in fairness to the rest of the committee, we are going to move on. Representative Lee, I saw your hand go up a bit ago. Do you still wish to get in, or?
I mean, I don't have to. It seems like it was very sufficient.
Yeah, the floor is yours if you'd like. We went through a lot of twists and turns since you raised your hand, and so I didn't know if you.
Yeah, I can just summarize and say that, you know, the scale of what we're looking at coming down from the federal government is huge. And the only way to solve this is to look at revenue raisers. And so I really appreciate Chair Gomez's, I guess, innovative idea of using this pay for to really make sure that we take care of our most vulnerable people across the state. So thanks.
Thank you, Representative Lee. Representative Johnson.
Thank you, Chair. Thank you, Chair Gomez. Question I just have, is there another example, is there another state that has a fifth tier that just floats up and down yearly?
Representative Gomez.
Thank you, Mr. Chair. I'm not sure. I know some things about other state tax codes, but don't know them well enough to answer your question. Okay. I would say that we are in absolutely unprecedented times with what we're facing from the federal government, and so sometimes those call for unprecedented measures. And Sean's pointing me toward my brief, maybe.
Thank you. Thank you.
Representative Johnson. Representative Johnson.
Thank you, Chair. The two other questions I have is I noticed this got brought up before in a previous bill that I had before me regarding what ifs. And I see here it says by December 31st, the Commissioner of Management and Budget would have to have certified the estimated total loss. What if that number doesn't come to us until February, January, March, like we're, you know, the example we're dealing with right now as far as cuts? What would happen in that situation?
Chair Gomez.
I guess I would ask if I could get an assist from nonpartisan staff. I'll look at.
Mr. Williams.
Chair Norris and Representative Johnson. So the Commissioner of Management and Budget would be required to make that certification by the end of this year. And then the Commissioner of Revenue would then apply the rate beginning for tax year 2026, so that's returns filed in 2027. So if there's no federal changes sort of in place by the end of this year, then presumably this rate increase would not blink on. So it's sort of dependent upon what's happening as of the end of this calendar year that would then go into effect for next taxable year, so the returns filed the following year. Does that make sense?
Representative Johnson.
Sure, thank you. So in a situation where if this was in place in 2024, we didn't know what was happening, December of 2024, he would have said, we don't need anything, and all of a sudden in March, it decided we needed 800 billion. What would happen in that situation?
Mr. Williams.
Chair Norris and Representative Johnson, my understanding is that the calculation of this fifth tier rate would be based upon the amount certified by MMB to the Commissioner of Revenue at the end of this year. So if there's no federal policy changes reducing Medicaid revenues to the state, then no fifth tier would go into effect next year.
Okay, so
Representative Johnson.
the only one last thing, Mr. Chair, my concern is going back, what message does this give to the federal government that Minnesota just told us they don't need us and they'll just keep raising their taxes and don't need to look for us for any help?
Chair Gomez.
I mean, Representative Johnson, I guess I don't know how the federal government's going to interpret this bill, or if they're going to take it as an indication that we don't need them. Across our budget, we have billions of dollars that flow to Minnesota. It's not just Medicaid. There was $23.3 billion of federal funds budgeted in fiscal year 2025 in our state. We do not have the resources to make up for $23.5 billion. You know, hey, I mean, if they're paying really close attention to a bill in the Minnesota, tax bill in the Minnesota House, then that's interesting, and it'll be interesting to watch the federal reaction to House File 2591, but I don't know. I think you think we're a bigger deal than we are, maybe. I'm not sure.
Yeah.
Thank you. Thank you, Chair.
Thank you. All right, Representative Elkins.
Thank you, Mr. Chair. Just a quick comment. I serve with Representative Anderson on the Fraud Prevention Committee, where we have been spending a lot of time on this. And what we know already is that the vast majority of the fraud is perpetrated by fraudulent providers, not the patients who are in danger of losing their care as a result of these federal actions. And we also know already that there is no magic wand that we can wave to immediately make this go away, and that in fact it is going to require a significant investment in modernizing DHS's computer systems to be able to make significant improvements on how much and how quickly we can ferret out and prevent this fraud. Thank you.
Thank you, Representative Elkins. Representative Wiener.
Thank you, Mr. Chair. My thoughts with this bill is the law of unintended consequences. And we've seen this, it goes back a long ways, tax the rich mantra, and what ends up happening. It goes back to the Middle Ages. There was something where you were taxed by the amount of windows that you had in your building or your house. We're going to tax the rich by doing this. And what ended up happening was they simply boarded up their windows, blocked them up, and the tax burden ends up falling on the lower income, the people who couldn't afford to do that or couldn't board up their own windows. We saw this in another bill. It was on the East Coast where to tax the rich, the idea was to tax expensive yachts. What happened was the rich simply bought their yachts someplace else, and it decimated the yacht building industry in that area. In our own country, in the 1930s, the income tax was a tax the rich to get us out of the Great Depression. And the tax burden ended up falling onto the middle class. So in our state, and especially if this bill moves forward, the unintended consequence there again is the people who have the ability simply will move. And then the tax burden will end up falling on the people that we don't want it to fall on. So every time we have a bill like this, we have to look at those intended consequences and the unintended consequences and really weigh them out. Because although something sounds good on the surface, the tax burden keeps falling on the same people, and that's the middle class. And that's why I'm really concerned about this bill. We simply will see people using their feet that can, and they'll move out of our state and end up having more problems than the intention was to fix. So, thank you, Mr. Chair.
Thank you, Representative Wiener. Speaking of unintended consequences, I'm pretty sure Mr. Bernstein just added the window tax to his list of ideas. To close us out, Chair Davids.
Thank you, Chair Norris. And getting back to the bill itself, I actually read it, and I was looking for the fifth tier, and I see on 1.11, there's the first tier, then the second tier, third tier, fourth tier, and I couldn't find the percentage for the fifth tier. So it says go to G. So if we go to page 3, line 3, is it John 3:16? No, it's 3:16. It's 3:16, and you go there, and there's no limit. Members, I don't know if anybody in this room has been on the floor when we've had debates on ... where you just put ... In other words, you don't have a number in there. This is a ... There's no number. Now, I've heard things, I'm not sure why we spend so much time with the federal government. Maybe it's good we do, I don't know. But I've heard expected cuts, maybe, could be, would have, should have, could have. And I was always taught that if ifs and buts were candy and nuts, we'd all have a Merry Christmas. Chair Gomez, I give it to you for creativity. This is amazing. This is amazing creativity here. But to go to starting in 3:16 with the ... where there's no number, I don't know how you manage that. And Sean Williams did a great job of explaining how it would work. But members, we actually have some bills on the agenda today that could become law and could do some good things for people. This is going nowhere. So I'm going to say, and finally, my favorite words in the legislature when a legislator says, and finally. And finally, I'm done. Thank you, Mr. Chairman.
Thank you, Chair Davids. Closing comments, Chair Gomez.
Yeah, thank you, Chair Norris. Thanks for the good conversation today. I just want to say that there isn't, Representative Wiener and I can probably go back and forth about the scholarship around tax flight. It's certainly not settled that people are responsive to increases in taxes like this, and that is like the main thing that causes migration. There's a lot of conversation about that. A contingent rate on people making above $1.6 million if they're married filing jointly, that's $1.6 million of income in a year, is not something, there is no mechanism in here where this can fall in the middle class. It's just not the case. But I just want to say I appreciate the conversation. We have to really, people can say whatever they want, right? People can make whatever, especially politicians. Politicians can say whatever they want. We got to look at when it comes down, when you have something in black and white, like this U.S. House budget resolution, you have to take people at not at their word, but when you have something that's adopted and that's in black and white, you have to take it for what it says. And it's very clear that what the plan is at the federal government, the plan there is to gut Medicaid, to gut SNAP, and to do so, again, not to balance the national debt, not to achieve other policy goals that help people afford their lives, right? Which was the promise of this administration. And what have we seen so far? Nothing even vaguely in that realm. Yesterday, $6 billion in new taxes in the form of tariffs, but I heard an administration official describe it as $6 billion of taxes just yesterday on the news. It was an interesting moment of clarity. And they want to gut Medicaid and gut SNAP to give tax breaks to their friends. And If that is the plan, then we have to have a plan in Minnesota. And this is one attempt. I'm open to other solutions to plugging a $1.4 to $1.7 billion annual hole. Please bring me all of your ideas. Thank you, Mr. Chair.
Thank you, Chair Gomez. And with that, Chair Gomez renews her motion that House File 2591 be laid over for possible inclusion in the 2025 taxes bill. The bill is laid over.
Right about the window tax.
All right. Next up on the agenda is House File 2745. Chair Stephenson, welcome to the committee. Chair Stephenson's going to move. All right, y'all, we're back at it. Chair Stephenson's going to move that House File 2745 be laid over for possible inclusion in the 2025 tax bill. I understand you have a DE1 author's amendment, Representative Stephenson.
Thank
Could
you,
you
Madam
describe
Chair.
it? Yeah.
And I want us to discuss the DE1, not necessarily adopt it. It's a different approach to the same problem, and I just want the committee to look at a couple different options.
Great, please go ahead and describe the DE1 amendment.
Yeah, thank you, Madam Chair, and I'll describe both the underlying bill and the D1 if that's okay. So this relates to a tax credit for small brewers. It's been in law since 1985, and the credit applies up to a certain amount of barrels and tax liability, but there's a requirement for brewers to file monthly even if they have no tax liability, which is very onerous for small brewers who are never going to have any tax liability because of the credit. So the underlying bill tries to eliminate that burden by just saying if you don't owe any taxes, you don't have to file monthly. In my conversations with the Department of Revenue, they had some concerns about that approach and suggest an alternative approach where we convert the credit to an exemption. That's what the DE1 does, which functionally does the same thing. It makes it so that a small brewer wouldn't have to file on a monthly basis. Another way to get at revenue's concerns in the original bill would to say that a small brewer has to file annually, even if they don't have tax liability. And I think either approach works, and I offer both to the committee for discussion today.
Excellent. Thank you, Representative Stephenson. Are there any comments or discussion on the DE1 amendment? I think you're going to withdraw it, right?
Yeah, I guess I'd offer and withdraw.
Yeah.
You know, it's just something we can talk about today, Madam Chair.
Perfect. Yeah, this bill's being laid over, so there's time to have more conversations as we move through the process. I'm not seeing any questions. Please go ahead if there's anything else you want to say, or we can just go to your testifier.
I think we can go to my testifier, Madam Chair.
Perfect. Thank you, Chair Stephenson. Welcome to the committee. Please just introduce yourself as you go ahead with your testimony.
Thank you, Madam Chair, Mr. Chair, members of the committee. My name is Bob Galligan. I'm the Director of Government and Industry Relations for the Minnesota Craft Brewers Guild. I'm happy to be here today and show my support for House File 2745. As the craft brewing market continues to change, we as brewers continue to look for ways that allow us to focus on our two main priorities, and that is the products and the people of Minnesota. We not only understand, but we fully support playing our part, paying our taxes. We simply are looking for ways that we can streamline our processes. We are manufacturers after all. We believe that House File 2745 is a reasonable relief that will allow our brewers the chance to breathe. We thank Representative Stephenson for working on the language. We also thank the Department of Revenue for its very informed suggestions, and we ask for the committee to support House File 2745. Thank you very much, and I'm happy to answer any questions.
Thank you very much. Are there any, Representative Johnson?
Thank you, Chair Gomez. Thank you, Representative Stephenson, for bringing this forward. I was wondering when we'd finally have something we can agree on. So it's nice that we're able to do this. And as a business owner, I can understand this in dealing with sales tax, and there was a part of the company that didn't have, because of what they were doing, didn't have sales tax that month, but yet we still had to keep filing to the point where we can get to the point we can do a quarterly or whatever. So whatever we can do to create that paperwork nightmare that can challenge small business people that'd rather be brewing something than doing paperwork, I think is a good idea. So I definitely support that, and thank you for bringing that forward.
Thank you, Representative Johnson. I'm going to take your comments as an indictment of the policy and technical bill from the department. You know, it's really controversial, so the good Chair Stephenson could get us back on track. Chair Stephenson.
Madam Chair, beer unites us all.
Indeed. Is there any further discussion of House File 2745? All right, not seeing any. Any final comments for us, Chair Stephenson?
No, thank you, Madam Chair. I appreciate consideration of the bill.
Wonderful. All right, so Chair Stephenson is going to renew his motion that House File 2745 be laid over for possible inclusion in the 2025 tax bill, and it's laid over. Thank you. Up next, Vice Chair Norris with House File 2723. Vice Chair Norris is going to move that House File 2723 be laid over for possible inclusion in the 2025 House tax bill. Vice Chair Norris, welcome to your committee. Please go ahead with and describe your bill.
Great. Thank you, Chair Gomez and members of the committee. We're fortunate here in Minnesota to have many large Fortune 500 companies, especially compared to other states of our size. But we can't allow the success of these current Fortune 500 companies to keep us from looking ahead and cultivating the next generation of businesses that will drive Minnesota's economy for decades to come. That's why much of my career has been focused on trying to promote entrepreneurship in our state. I've worked on deals to provide early stage capital to entrepreneurial ventures like those supported with the Angel Tax Credit. That's how I know the Angel Tax Credit is an important tool for fostering entrepreneurship in our state. It helps attract capital to our Minnesota startups. It encourages investments in companies based in greater Minnesota and those owned by people of color, women, and veterans. And perhaps most importantly, it's a signal to the entrepreneurship ecosystem that the state of Minnesota supports a vibrant startup scene so that we're constantly working to cultivate the next Medtronic. This bill includes a couple of updates to the current Angel Tax Credit legislation. First, it renews the credit. Right now, it's set to expire. Actually, it has expired. We're trying to renew it for starting this tax year. And it raises the available credit to $10 million per year for the next 4 tax years. It also increases the investment cap from $4 million to $15 million. There's a lot of legitimacy to having a cap, but as you know, with inflation and everything else, the way our economy works, that cap is a little bit outdated, and so we're suggesting that we bump it up to $15 million to kind of rebase it for today's economy. The bill also clarifies the 50% minority ownership definition is intended not to disqualify companies post-seed funding. So this deals with an issue where as you do even just to bring on some small amounts of capital, you can create a dilution issue where a business would no longer qualify. And it shifts the conversion timeline from 3 years to 5 years. So that's a little bit about the bill, members, and now I'd like to turn it over to my testifier.
Wonderful. Thank you, Vice Chair Norris. Welcome to the committee. Please introduce yourself as you get started with your testimony.
Good morning, Madam Chair. Mr. Chair, members of the committee, thank you for your consideration. My name is Ben Wagner. I'm here today with Medical Alley and proud to support House File 2723. For more than 40 years, Medical Alley has been a global network of more than 800 leading healthcare and technology organizations all across Minnesota. Many of the more than 1,800 companies that we support each year are early-stage startups that depend on investor capital to grow, to transform ideas, and to bring high-quality jobs to communities all over Minnesota. The Angel Investment Credit has been a vital tool in helping these startup companies secure the early investment they need to get off the ground. It provides an incentive for investors to take a chance on bold ideas, and oftentimes those ideas come from first-time entrepreneurs, from underrepresented founders, and regions not just in the metro, but also in greater Minnesota as well. Since the program was created in 2010, companies benefiting from the Angel Investment Credit have created nearly 3,000 jobs and attracted more than $500 million in investment. We've already seen some examples of the long-term impact. I've got a couple just to share briefly. 4C Medical Technologies, a certified business in 2016, took advantage of the Angel Investment Credit, and just last month, closed a $175 million Series D funding round led by Boston Scientific, one of the largest private raises in state history. Another company is called Miromatrix. The company is pioneering bioengineered organs. It took advantage of the angel investment credit, later partnered with Mayo Clinic, went public in 2021, and is now advancing toward first-in-human clinical trials to potentially eliminate transplant waitlists. These companies and more like them across the state are proof that when we invest early, Minnesota grows. But without renewed support for this program, as Representative Norris mentioned, we risk losing talent, we risk losing investment and opportunity to states that share our borders, to the coasts, or even to other countries which are investing heavily in programs like this. Our entrepreneurs deserve the chance to succeed here at home and continue strengthening the state's elite workforce and innovation in healthcare and life sciences. In closing, funding the angel investment credit really is one of the most effective, targeted ways that we can strengthen Minnesota's innovation economy and spark job creation for decades to come. Thank you for your consideration.
Thank you, Mr. Wagner, for your testimony. Amy Garza? No? Okay, is there anyone else present who wishes to testify on House File 2723? Not seeing any. We'll move to member questions or discussion. All right, not seeing any. Chair Davids, you got any comments to wrap us up before we go to?
Thank you.
Excellent.
Good bill.
Thank you, Chair Davids. Good bill. Vice Chair
take
Norris, please close us out.
Thank you, Chair Gomez. Thank you, Chair Davids. Appreciate that. I do think it's a good bill. As Mr. Wagner testified, we've seen a lot of great successes from this tool over the past. It's a way to make sure that we are investing in building that next generation of great Minnesota businesses. And I hope that as we put together the committee's tax bill, we can find a way to continue this investment.
Excellent. Thank you, Vice Chair Norris. With that, Vice Chair Norris will renew his motion that House File 2723 be laid over for possible inclusion in the 2025 tax bill, and it is laid over. All right. I'm going to bring more tax increases on the rich, because then afterwards, it's like we just get along so well. There's bipartisan support for all the bills afterwards.
Madam Chair,
Yes, Mr. Chair.
we're just worn out.
All right, up next is House File 2730, a Gomez bill. Because I know next to nothing about it, I'm just going to stay here and let Mr. Bagnoli come up and describe to us the public finance bill. I'm going to move that House File 2730 be laid over for possible inclusion in the 2025 House tax bill. Mr. Bagnoli, welcome back to the committee. I don't know if you have Martha's cookies for us or if we're going to make it on Jefferson Starship's Instagram again, but like, this better be as good as last time you were in front of us.
Madam Chair, members of the committee, for the record, my name is Joe Bagnoli with Winthrop & Weinstein Law Firm. I am here today with the Minnesota Institute of Public Finance, and I unfortunately don't have... Jefferson Starship was just here, and he's just leaving. I have nothing for Jefferson Starship today, but the volume of text and emails and that I have received relating to Jefferson Starship, I have seen the entire Wikipedia page, the whole thing. It's always educational to be in the tax committee. Madam Chair.
Truly the apex of our experience together as a tax committee this year, I'm pretty sure. It's all downhill from getting on Jefferson Starship's Instagram, you know? Sorry, Mr. Bagnoli, please proceed.
Madam Chair, just, and I'm going to let my colleague here, Rhonda Scobie, introduce herself and take it away, but just a little background on who we are. This is an organization called the Minnesota Institute of Public Finance. It consists of practitioners that issue public debt. These are lawyers, bankers, and financial advisors that help to issue public debt for every public entity that you can imagine: cities, schools, all local units of government, park districts, as well as the people that help issue the state's debt. As a general matter, as they go about their business throughout the year, much like the bill that you heard previously with the Department of Revenue, they notice things that are either outdated or inconsistent with federal tax code changes, or just clarity issues where things could be clearer or made easier for debt issuance in the state of Minnesota. So it's sort of a technical bill for the public finance area. So with that, my colleague, Ms. Scobie, is going to introduce herself and walk you through the bill.
Great. Please just introduce yourself as you get started.
Thank you, Madam Chair. My name is Rhonda Scobie. I am a bond attorney with Taft Law and representing the Minnesota Institute of Public Finance today. I have brought very little rock and roll discussion. Instead, we'll talk about public hearings, which are just as fun. I'll group sections 1, 4, 6, and 9 together. They all relate to public hearings. State law requires varying notice periods depending on the type of bond that's issued. Some of them are 14 days, some are 15, some are 10. In the interest of harmonizing these, the bill proposes a 10-day notice period. This is still more than required by federal law for the types of bonds that federal law applies to, which has a 7-day notice. With the reduced publication schedule of local papers and monthly city meetings, a 15-day notice really becomes a 21-day notice when you build in the time it takes to get it to the paper. And if you've got a monthly meeting, it gets very difficult for local governments to meet a longer notice period. So even though there's not much difference between 15 and 10 days logistically, process-wise, it helps the cities and counties out quite a bit. So that relates to, as I mentioned, sections 1, 4, 6, and 9 of the bill. Section 2 relates to how jails and correctional facilities are financed under a guarantee program of the Minnesota Public Finance or Public Facilities Authority. Under current law, jails, correctional facilities, and law enforcement facilities are eligible for the credit enhancement program, which provides a limited state guarantee by providing a higher credit rating for counties, and therefore they can borrow at a lower interest rate. Jails and correctional facilities and law enforcement centers are often now constructed to include courthouse facilities in order to minimize transporting individuals between the jails and the law enforcement centers and the courthouses. And these combined facilities are often referred to as justice centers. So the proposal in section 2 modifies the definition of debt obligation so that counties can finance these combined facilities in the same way that they could finance separate facilities. Section 3 also relates to the PFA credit enhancement program. Currently, it is only authorized for new projects. This means if a county or city is able to refinance its debt at a lower rate, it's not able to do that. The proposal would save local governments money by allowing them to refinance at a lower rate, and it would reduce the state's exposure on these guarantees as the cities and counties refinance at the lower rate. Sections 5, 7, and 8 relate to a federal limit referred to as the volume cap. The volume cap is the federal limit on certain types of bonds issued at the state level. Section 5 clarifies an existing cross-reference to this volume cap. It clarifies the cross-reference. Section 7 and Section 8 relate to deadlines for bonds issued under the volume cap program at the state level. 7 relates to residential rental projects, and 8 relates to all other types of qualified bonds.
And Madam Chair, I would just note that these 3 last provisions were included within your bill, your tax bill last year, the Senate's tax bill. They were adopted on the first day of the conference committee that didn't end.
RIP 2024 tax bill, yes. Thank you, Mr. Magnoli.
Yes.
Please proceed.
So the short story is there's been some confusion about whether you can carry them into the next year. Under the federal law, you can't. And this clearly documents that in state law as well. And the final section, section 10, relates to, again, financing jails and correctional facilities. Under the existing law, it uses the term sheriff's residence. That is from the 1905 origin of this section, and it doesn't reflect the current practice. So this modernizes that language to refer to sheriff's offices, law enforcement centers, and justice centers.
And with that, Madam Chair, that presents the bill.
Thank you.
If there's any questions, we're happy to.
Yeah, why didn't you just get rid of the sheriff's, the reference to sheriff's residence in this? Because is there any situation in which we would use a public bonding authority to erect sheriff's residence, to quote the bill?
I'm not
No.
aware of any,
Okay.
but hesitant to delete things that your past colleagues have included.
Madam
Mr.
Chair, I
Bagnoli?
just would say, as a general matter, we try not to, exactly what Ms. Scobie just said. For all we know, that's something that we're not about to take away something that is meaningful to a county that we don't know and pick a fight where none needs to be picked. But
Right, and there
That's,
has to be a future public finance bill, so, we gotta leave some stuff to fix later. Any discussion or question? Representative Lee?
Thank you, Chair. Yeah, I guess I just want to add or point out to members that, in a year when we don't have a lot of general fund dollars for LGA or CPA, this is a really good way to support our cities and our counties so that they can have lower interest rates for refinancing, right? And if they want to build courthouses, so.
Thank you. Anything else, Representative, or Joe, Mr. Bagnoli? Wherever you are up there.
Madam Chair, and I would just say that this bill has been vetted, reviewed by, we share it with Minnesota County Association, League of Cities, and as well as the MMB, who issues the debt, as well as the PFA. So this has generally been shared, and generally we don't have any opposition. People seem to like this. So.
Great, thank you. Chair Davids?
Well, thank you, Chair Gomez. I look at 2730 as another fine piece of legislation, a Gomez-Davids bill. The Davids-Gomez bill, House File 2487, I'm getting some real nasty grams. I hope you're not. That's the governor's bill. They said, it starts out, how could you? But this public finance bill, this is my 33rd public finance bill. And sometimes they've been described, not by me, of course, but as they'd rather watch paint dry, watch corn grow, or eat broken glass than to sit through one of these. But it's my 33rd year for a public finance bill. I've never found these bills to be interesting, but they are very necessary. And the people that present to us are like super smart. This needs to be done. So I hope this will go into the omnibus tax bill unanimously. Thank you, Madam Chair.
Wonderful. Any final thoughts for us, Mr. Bagnoli?
Madam Chair, Mr. Chair, no, thank you.
Cool. All right, with that, I'm going to renew my motion that House File 2730 be laid over for possible inclusion in the 2025 tax bill, and it's laid over. Our next meeting is Tuesday, April 8th. Chair Davids has the gavel. You want to keep us in suspense, or anything you'd like to share about next Tuesday's meeting?
I'd like to share, Madam Chair.
Wonderful.
Thank you for the opportunity. We've got up for Tuesday, House File 1016, Lawrence bill dealing with LGA, House File 2801 or 2001? 2801. Fogelman bill on LGA, Representative Anderson on the committee here, House File 156, an Olmsted County bill, House File 2488, a David's annuity bill that should go on the consent calendar back when we used to have those, House File 526, a Dotseth bill, and then House File, a Gander bill having to do, I think, sales tax exclusion, and then the Robbins vendor allowance bill. So that's the agenda for Tuesday. Like I say, be there or be square.
Wonderful. Thank you, Chair Davids. There being no further business in front of the committee, we're adjourned.